Scottish independence very much back on the cards for separatists, but exiting Europe's single market has been the big headline grabber. It means leaving the world's biggest free trade zone with zero tariffs on goods and services. I asked Kallum Pickering from Berenberg Investment Bank what kind of impact that would have.
It's close to what we expected. I mean, the problem is people take an oversimplistic view when they think about the single market. Really, the best way to think about it is a complete collection of trade deals for individual industries, be it car making, be it agriculture, be it financial services. So there's no real half in or half out when it comes to the single market. That simply doesn't exist. So what we've learned today is what I suspected all along, which is the UK will completely leave the single market. It will no longer become an EU member. But what it will do, it will set up a series of trade deals in separate markets. So what we'll end up with is a large collection of bilateral trade deals that help ease trade between the UK and the EU after Brexit.
And as we look at some of the trade deals, May did talk about this very ambitious free trade agreement. How likely is that, though, in the short term?
Certainly to move the UK from its current status as an EU member to something like, say, Switzerland, which has already a lot of bilateral trade deals with the EU, will take some time. So I doubt we'll get that within the 2 years set out in the treaties. More likely we'll need some period of transition, say 3 to 5 years to that. But in terms of the detail, I don't think we'll get anything like full EU membership in terms of market coverage. It's likely that the UK gets a good level of access to the goods side of the single market, but only partial access to the services. The critical risks lie in access to financial services in the EU.
And let's also look at some of the reaction that we're seeing in terms of investors, both in the UK and the EU. How do you think they're taking Theresa May's speech?
Well, certainly the pound appreciated a little bit today, which was somewhat of a surprise. I mean, the market consensus was that the pound would weaken if Theresa May sort of veered towards a hard Brexit, which is kind of what she did. But what we saw is that the clarity from Theresa May actually brought some calmness to markets, because the UK economy has actually done quite well since the Brexit vote. It's done far better than most people had expected. I think the UK will continue to grow at an okay pace over the next couple of years. And even in my Brexit long-term scenario, where I reduce my potential rate of growth from 2.2% to 1.8%, it still makes the UK the fastest growing economy in Europe. So I don't think that Brexit means there are no reasons to invest in the UK. It's just really about certainty. So now that that uncertainty is slowly going away, I think that UK investors, EU investors may think that it's okay to start thinking about that, making investments again.
So now that we actually have that clarity about this hard Brexit, let's look at some of the potential economic benefits then, and perhaps the fallout that comes along with a hard Brexit.
Okay, so a hard Brexit, let's be absolutely clear, that is defined as the UK trading with the EU on WTO terms, that's World Trade Organization terms, that's very, very minimum trade agreements. That I don't think is likely. The UK will establish some free trade agreements in certain industries with the EU, but it will be less comprehensive than EU membership. I think after the UK leaves, if we take a look at the isolated impact of leaving the EU, I expect slower growth in migration to and from the EU, slower growth in trade, slower growth in investment. That, in economic terms, is what we call a supply-side shock. That isolated effect of Brexit will reduce trend growth, as I said, from 2.2 to 1.8. However, if the UK manages to strike some good non-EU trade deals, if the UK manages to set up its domestic economy in a more competitive way, so that at-home businesses can hire and invest more easily, then there are some potential benefits, but those aren't exclusive to Brexit. They could have happened anyway. So Brexit all in all is a negative for the UK.
And as we look ahead, obviously some of these negotiations could take, in some cases, according to Theresa May, she's thinking closer to 2 years. A lot of people think it's actually going to take a lot longer than that. What does this mean then for the UK business community and people who want to trade with the UK while they have this patch, all these years of negotiations still ongoing?
Well, I think the broad strokes of Brexit will be set out within the 2-year period. Now, let's be clear, the UK and the EU are already on common terms when it comes to tariffs and regulations. And one thing we learned today from Theresa May is that she will simply instruct Parliament just to carry forward after Brexit the EU regulations that are in place. And that's really the key thing. It's the difference in regulations between two economies that make trade and investment difficult. Let's think of it in one way. The UK in the EU speak the same business language. So the key thing is, so long as the European economy continues to grow at a decent pace and the UK continues to grow at a decent pace, which I expect, and businesses have markets to sell to, they might be a little bit more cautious amid Brexit uncertainty, but they won't hang off investments at the expense of not selling goods and services in the markets. So providing after 2 years the broad strokes are there, that the UK will get access to the goods side of the market and partial access for services, that should be enough for businesses to more or less continue as usual.